Good morning, 5:53 a.m. Pacific Standard Time. Futures, pre-market future market, pre-market futures, what does it mean? It means that stocks gap up and they gap down, and we've had some headline news. You had your jobless claims come out, your trade deficit, and other kinds of things that people don't like. You've had ECB people over there, Tritchett, doing his thing. Of course, he'll be going his way out. But we have a left elbow gap down going into the opening bell. And on the Nasdaq, this GIII, we don't know enough about it. We'll put someone on it right away as they're listening to me. They can go find out. It's probably an earnings thing. But let's just get with the diminishing left elbow. Price line's only 2.25. Amazon, we know that we were buying put options on Amazon. Yeah. And we talked about how Amazon would gap down and how we bought those puts. They were $16.75 the other day, and we got them down here on those lows. And there's the 220 put where Amazon had ran up. And every time, last time we got those 220 puts, they went from like $7.50 to $42. Well, in price action volatility on Amazon this morning, because we do have people that have it, it's 219.90 with the 217.5. As far as that trade goes, you're going to have to find out where the SMF market maker half bar is in price action. And on that Amazon trade, you come down and hit that bottom, want to run right back up to that 220, meaning that you could get an exit with a profit on that put when that comes down to the 369 and wants to run back up and test that double high or half that price action bar with the reversal. You could lock and load it again because it's cheap. Netflix, $1.21, $1.60. We all know that Netflix yesterday, the prior day in price action when we were down on Tuesday or whatever it was, Netflix was up on the day. And then when we were up big yesterday with low volume breakouts, Netflix was down on the day. It trades a little bit sometimes inverted the market. Now that Signup, that one there had a big move yesterday back up toward those highs. And that these weekly individual price action ranges are burning right at where those electronic high-frequency machines start taking the probability and selling down the bid and the names, and that is what support your short. Now, having said that, all eyes on the bull, it's only down $1.22. You have Obama. This is going to be the 5th actual trading day of September. And what do we go by? Weekends don't count. It started September 1 and it goes through the full 5-day price action. Because at the end of today's closing bell, we are going to be able to put together a very sophisticated buy and sell script for September. So Google, on the other hand, only gapping down $1.04. The thing about it is, MMTs, I've said it clearly, it's called the left elbow gap down diminishing, though. It's not all day long. What do I mean by that? Google's not gapping down $6 or $7 or $10, and Amazon is not gapping down $4 like it normally does in its volatility hook and pre-market futures. Right now, the Dow futures are down because of this data. And what we're looking for is that the left elbow, 72 points down in the Dow, okay? And your 9.3 handles, 930, down on the S&P at 1189. And we talked about how we had to get above that 1186 yesterday, and we blew right through it. And we went up and we challenged that lower delta line. And today on the S&P, when it comes down and hooks itself, you're going to be looking for immediate knife hook reversals. And what are those reversals about? They're about the change between the buyer and the seller. And we all know you can get a favorable outcome, but here's the key to today, MMTs. You got a diminishing gap open down list. Don't even look at this one here because I don't know the story on it. But as far as starting with Priceline, Apple, and the culprits, your win is only down 95 pennies. What you're going to be looking for is exactly what you had yesterday. Exactly what we talked in pre-market yesterday morning. Everything that we talked about. What you're looking for is that left elbow to break all new highs, and that S&P 500 needs to shoot through that 204.70 handle. You'll know what I'm talking about when I say that. That's a ratio number on the S&P. That's not the actual. What you will be looking for on the S&P though is 1204, and you need to break higher through it from the left elbow gap down. And that if the short sell is in the market, you will come up, you will hit the half bar. There will not be a double top test, but if you come up, you come back up, and you start to slide and everything starts to descend right away, then you know that that short transaction is going to be supported, because if those high frequency machines start selling down the bid, then you're locked in. And you would be looking at that side of the market would be totally opposite than what you've had the last 2 days. MMTs. And remember, price action volatility is what it is. But if the price action volatility is diminishing on the pullback and then breaking higher with a 3-minute buy action bar, then you know how to monitor that transaction between the current buyer and sellers is that the buyers obviously are in control. And that's how it will be. All eyes will be on that bull. The thing about the first bounce on the opening bell with the diminishing, because you know this left elbow is nothing. Price line's only what? We're crying out loud, $1.94. Okay, it's not $10.90 or $7.80 ratio. The ratio gap down in these names on left elbows are diminishing in price. So when you first get that buy action bar on these left diminishing price left elbow gap downs, is you're looking for that torque. And what is that? It'll be in your application. And I'm just going to say one thing, that it's a very, very fine movement between if I'm rolling from 0 to 35 and Beethoven's coming in, hey, you're short all day. On the other hand, if we do what we did yesterday and the day before in the market maker application, you will know that that is automatically price action strength, and there's nothing to fear that. So we're going to wait the market, because today is day 5 of September. And it's going to come out, and we're going to look at we're going to take a look at what your first 20 minutes are. But particularly that first 30-minute price action beat, that second 30-minute price action beat with 15 minutes in the middle to wait that buyer and that seller. And what side is going to get, if they're going to walk the bid down, that's the short. If they're going to walk the ask, well, hey, that's the bid pop, and that's a higher diamond or lower diamonds closing on the lower end is your weakness for your short. MMTs. So enjoy the pre-market, enjoy the economic data, enjoy the Obama speech this evening, everyone. Hopefully you find some answers. So far, the way the polls say it is that people haven't found any. Welcome to the pre-market Nasdaq. Now, on the other hand, you don't have much gap up. You got CALP, you got that GOLD, and you got these gold stocks going up again. And you got that SQQ slightly 0.32 ratio bear gap is gapping up a little bit. Not a big one, no. And so when these markets are made, you don't have a lot on the gap up, but you got a couple of minor stocks right here. And it's been the fact that last week when we had a couple of miners that the market had flipped that reversal. meaning that it was a short day. So we know what these two are. We know what the CALP here is also 3.06. That's what you have. Okay? And the trade management is, this is what you have here. You have a longer gap down, it's okay, but each individual name doesn't have, it's not like it's a big teeny gap down like a delta or two deltas or a delta and a half or whatever case is. It's not that. So that buyer and that seller will be battling it out right on that opening bell. Just do what you have done each day and every day. And for the people that were trying to trade this Baidu the other day, watch that bull, watch the TQQ, Netflix, watch it. That Sina had a big move yesterday. Watch that Google, watch this Amazon. See where that put option opens up, because the minute that you do that, you're going to want to watch the $210 call against the 220 put on Amazon.